Good morning, Paul Georgie from Allendale. It's June 24th, 2010. Well, the grain market's expected to open higher here this morning. Corn 1 to 2, beans 3 to 4 higher maybe, and the wheat up 1 to 2. Outside markets not providing much direction here at this time. Dollar is unchanged to up a few ticks. The crude oil is down just slightly, and the stock market's expected to open lower here this morning based on the futures contracts right now. So that might have some impact on it. The things that we're looking at here this morning, we did have export sales out this morning. That was friendly for the corn. 600 to 1.1 million was expected. It came in at 1.456 million tons sold. Soybeans 350 to 550. That was on the high end of the range at 541. And wheat, strong sales again. 200 to 400 is the range. Came in at 721,000 tons. So the export sales numbers could be positive to us. Weather conditions here in the U.S. continue to be positive for plant growth and crop development, at least for the next 2 weeks, even though we've got some warmer, drier weather coming into the Midwest here next week. It still is should be positive, as we've had all this rain move across the Corn Belt, and that is good that we can slow down the moisture level for a little bit. Not shut it off, but just slow it down. The other news that we've got and we're dealing with here is the planted acreage report the USDA is going to release on June 30th, next Wednesday morning at 7:30. Trade averages are starting to develop, and it looks like the trade's expecting an increase in corn acres. They're also expecting an increase in stocks. So fundamentally looking at a bearish picture, and I think that's part of the reason why we've seen the weakness here in the corn market over the last several days. And also another reason for weakness in the corn is probably the spreading between the corn and the wheat and corn and beans, as these negative fundamentals continue to weigh on this market. The thing that we've got to remember, though, is that the market usually bottoms when the bad news is upon us, and don't be surprised if we get a negative report here next week on that this market rallies after that, simply because you throw enough bad news at it is when you put the bottom in. So just a thought that you've got to keep in mind. The trend, however, is sideways in this corn market. We seem to have good demand on weakness. No news out of China here this morning as far as any buying goes, but the talk and the rumors are that they're in looking for some more corn. So we've got to watch that here on a daily basis. Soybeans, we've got the first crop initial bean plantings date has passed here on June 20th. We'll see, with as wet as it is through most of the area, we're hearing a lot of prevented planting, but this in the southern part of the Corn Belt, where wheat harvest is beginning, soybeans are going to be going into the ground in excellent condition for a double crop situation with plenty of moisture. So that could weigh on this market as those beans get in the ground with excellent condition. The wheat market, comments there. Canada is still very wet. They haven't dried out any, and it appears like they're basically done planting wheat and canola in the western regions. That will have a significant impact on Canada's production, so we'll have to monitor that and see where the actual numbers end. The harvest here in the U.S., hard red winter wheat is moving to the north. We're hearing that the protein values are as good or better than expected, and yields are decent and probably above average in most cases. In the soft red wheat, however, there is some concerns, and they've got some problems with quality there, mostly because of the heavy rains that have been moving across this soft red wheat area. The markets this morning, we expect that any kind of rallies will be met with some type of selling here. So a 5 to 10 cent rally in the bean market would certainly look as an opportunity to sell here today, as we broke the market technically yesterday, and the fundamentals appear to be negative here for a period of time, at least until that report next week. The cattle market, cutout values there basically unchanged. The choice was down a little, the select was up a little. The cash markets traded at 91 yesterday in Kansas, 90 in Texas. The demand for cattle is so-so here, simply because of the cutout value, and the meat supplies are burdensome at this point in time. And the direction of the futures market is certainly impacting that attitude of the packer buyer. With the stock market under a lot of pressure, that's weighing on the futures, in turn giving the packer buyer some energy to bid lower and get those prices. So monitor that closely and stay in tune with Allendale Research, and we'll keep you informed there. In the hogs, cutout values were down 48 yesterday. The cash market steady weak here this morning. Futures, however, are in a trading range. They've got support around the 83.50 area. Resistance, initial resistance here is around that $84.90 to $85 area, and then again up around that $85.90 area in the August contract. The trend in the market in the hogs appear to be strong, still sideways to higher. Look to buy breaks. Demand and supply in the pork market is very good right now and positive to the market. However, we do have a USDA report coming out on Friday afternoon, 2 o'clock, Hogs and Pigs report. The trade's expecting for quite a bit of reduction across the board, pretty much a 3% decrease in hog supplies. All hogs kept for breeding and market hogs off on this report, so monitor that very closely. So we got some things going on here. Keep in touch with Allendale. We'll be happy to discuss them with you and see how they might fit into your strategies. And you can reach us at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning.